you said that you're going to analyze BTC for just to show us what will happen this upcoming week, guys.
Yes, sir.
So I want to make you the admin now, so you can share your screen and just analyze what is going to happen. And before you continue, John, do you know how to calculate pips in BTC?
Yeah, I can hear you.
Okay, I'm asking, do you know how to calculate pips on BTC USD? Like example now, if you want to enter your trade, do you know how to calculate this is what I'm willing to lose? Do you know how to calculate the loss?
I use the pips measurement. You know, the BTC have different pattern of calculating it.
Okay, so the reason why I'm asking this question, someone asked me this evening, so I just decided to ask you the question, so like maybe you can just explain.
Okay, I will drop a video. I will drop a video on that on your DM.
Okay, no problem. So you can go ahead to share your screen.
Can you guys see my screen?
Yes, we can see your screen.
Yeah. Alright. Well, first of all, this is a weekly analysis. Let's start from the weekly.
Okay.
I do start from the weekly to do my analysis first. Let me see my weekly bias. Hello, can you guys hear me?
We can hear you. We can hear you.
Alright. Now, if you check on the weekly time frame, you will discover that BTC is uptrending. These are not trend. BTC is uptrend. But look at what happened here. This is a resistance level. This is a resistance level. You see, market was not able to break 73,000 on the weekend, on the weekly time frame. And based on what I'm seeing here again, you see this is an engulfing candle. See? This is an engulfing candle. Now, what does the weekly telling us? It's already telling us the market is uptrending. Market reverse went up, did not break up. Now, what I'm expecting on this weekly time frame is market will be coming down. Like BTC will be coming down. At least, maybe to retest at this point.
Okay.
We're going up. Now let's come down to the 1 day. That's for weekly. Come down to 1 day. If you check on the 1 day too, the trade has already given us a double. Already giving us a double top, telling us that this market will be coming down. So it's already telling us that the market will be coming down. Now let's go to 4 hours.
It's still in this. It's still among us, but still here. So what is happening? Okay. Oh, maybe it's network. Okay. So what I'll do is that I want to first of all analyze the market. What will happen throughout throughout tomorrow till Friday, and then I will now share my strategy, like the way I trade. So that is the two things I want to do this night. So let me share my screen. Can you guys see my screen?
Yeah.
Okay. So this is weekly time frame. This is on the weekly time frame. So I would love this thing to be very interactive. So like, what are we seeing in this weekly time frame? Is it uptrend or downtrend? Is it? Yeah. What is it? Let me see. Like, if you check the flow from this previous side, is it an uptrend, or this weekly time? Is it uptrend or downtrend? For it, not okay. What is it? Okay, so now for you to confirm, maybe it is uptrend or downtrend. Uptrend, it will have higher high, higher low. Downtrend, to have lower high, lower low, lower high, lower low. So let me just mark this previous low to look, maybe it has lower low or something like that. So I'm just using this is just the basic stuff. So if you check what you see, that all these things has they has a lower low. If you check what you see, this. Someone just messaged me now. Oh, you say that network. You see that network logged him out. I don't know. Let me just continue. So this low, this one is lower than this low. This one also is lower than this low. So this thing is just confirming that this thing is still on downtrend. If you notice, this low, this is the high it gave, and this high, this is the low it gave, and this low, this, assuming this high break this, it did not break this previous high. You see that it's showing us that this thing is still on downtrend. Now this high is just playing around. It's just trying to give us, but not normally until this high, until this low, give us new high that break this high. Until this low give us new high that break this high, this market will not be on downtrend again. It will change to uptrend. So for now, this market is still on downtrend, like in this weekly analysis. But we all know that before this weekly analysis, before you cannot just you cannot even say it can be selling in this weekly analysis and you'll be buying normally, you know, because this weekly analysis is very long now. It's for all those swing, it's even more than swing yourself. So what I'm just trying to say that this thing normally is still on downtrend. So we already confirmed that it's still on downtrend. So the next thing now is that if this low, the market broke this low. So this low, as the market broke this low, it's just giving us a confirmation that this thing is impulse move, and any impulse move you see, there is always a correction, and after correction there will be a place that the market will, the correction will end, then to continue the next impulse move. So what I'm trying to say is that if this market wants to continue this next impulse move from here, it will have to create another lower low to break this low, you know, something like this, to just break this low, like what has been happening here. So now our question here is that, have this market reached the highest point for it to continue the sell? That's my question. And how will you know that this market I know you want to go Shago. We have not reached that side now. Hold on. So the next question here is that, how will you know that this market the retracement has completed, that you need to continue to sell? So what I'm trying to say is that first of all, normally if you are using Fibonacci, the general rules of Fibonacci is that's 0.6 to 1.8. 0.618 that's 0.618 is 0.618. That is the general rule. So what I'm trying to say is that, and if you mark your Fibonacci from the high to the previous low, so that's 0.618. That is the general or the default level for the market to retrace and then continue to sell. So you know, I mean, I already do some changes more Fibonacci. So I don't know what to do again. So even though I'll use the Fibonacci later. So let me just use this. Let me use this gun here. First of all, have I explained the work of this? Have I explained it? The work of this? Is it GAN they're calling it, or what? GAN, GAN box. So have I explained this? The work of this before? Okay, so this thing is just like to separate the discount price and the premium price. Hello, can you guys hear me? Okay, so the work of this GAN box is to separate the discount price and the premium price. So as a forex trader, we don't want to buy high, we want to buy low and sell high. So the thing now is that as this market is what do you say? Wait, can you guys, okay, can you see my screen now? Can you see my screen now? Okay, so, and hope you can hear me loud and clear. Yeah. So what I'm trying to say is that as a forex trader, we don't want to buy high, we want to buy low. So the next thing, but hope you are seeing my screen. That's my own question. Like, are you seeing my screen? Are you seeing what I'm doing? Yeah. Okay. So what I was saying before is that as a forex trader, we don't want to buy low, and we don't want to buy high and sell low. But what we want to do is that we want to be buying low and be selling high, because our work is just to trade and make profit, not just to show that we can trade. You understand? So that what we used to do first, to show that we can trade. So what I'm trying to say now, this the work of this gambos is just to separate the high prices and the low price. Like example now, you see that when this market start to reverse or retrace from here, means any, as a first trader, you can only say for you to be looking for sell in this area is very risky, because we know that market cannot just retrace from this area because this is the discount price. So it's when the market reach the premium, this is the premium, and this area is the premium price. So this way we'll now be looking for sales. That is what I'm trying to say. So now the market have reached this premium price, so we have already achieved this first thing. The next thing now is the Fibonacci, because I said that in that Fibonacci, for the general rules in Fibonacci is that 0.618 level, that once the market reaches there, you'll be looking for continuation of the trend. But for me, I used to use two level. You know the level. Let me go back and say that level again. These are two levels I used to use. I used to use 0.71 and 0.79. The reason why is that these two levels, they are the extreme level. You understand? That the extreme level. So now this market have triggered the 0.71, but it have not triggered the 0.79. So now the question here is that, will the market continue to sell from here, or the market will come and trigger the 0.79 before selling? So that is another question, and that we have to like detect before doing anything. So let me delete this arrow, gossip. I don't know what the arrow is doing here. So now the next, hello, can you guys hear me?
Yeah.
So the next thing now, we are done with this weekly time frame now. The next thing is the daily time frame. So that is 1440. So in this daily time frame, this is the, okay, where is this thing here? So what I'm trying to say that this market have triggered this first level, that is 0.71, but it has not triggered this 0.79. So the thing now is that, how with our next question is that where will this market go? Will the market continue to sell from here? From that weekly analysis, we are seeing that the market have reached the premium price. So will the market continue to sell from there? So that is the next question. So what are we going to do now is that, if you check here, you see that this market give us, when it triggered this 0.79, it gave us this impulse move to the downside, and this impulse move break this structure here, this particular structure here. So the way I have to trade is that, if I see break of structure, I used to like use my Fibonacci, that level. So now this high to this high, it means that if this market break this high here, the market will continue to buy. Why? Except one thing, except markets want to manipulate, or like just to what do you call this thing? Liquidate the buyers, finish. But normally, if this market clear this, like if the market buy and clear this place, so the market want to continue to buy, something like that. But for now, if this thing is impulse move to the downside, there will be normal correction to that level I'm talking about. So now the same way I draw down my Fibonacci in that weekly analysis. So let me draw it down here. Let me draw it again to this place. So I will now check, should the market have triggered the 0.71 and 0.79? If you check well, you see that the market triggered the 0.71, but it almost triggered 0.79. So I'm just trying to use all these things to explain, like from this bigger time frame, we'll be dropping it down to the entry time frame. My own entry time frame is 30 minutes. So it's the same way. Like example now, I'm not a swing like a position trader. People that used to hold trade for 1 week, 2 weeks. No, I'm not to trade like that. So assuming I trade like that now, all these things will just be like one of my entry. But I don't see trade like that. So I'm not using all these things to know what is going to happen that smaller time frame, like the 30-minute time frame. So now we see that this market have given us impulse move to the downside. So this will be the correction. So now after this correction, what are we expecting next? We are expecting another impulse move, So now, as I'm saying this thing, would this be the next impulse move to the downside to give us another new low? Because if this market wants to give us another impulse move, just remember this low will be broken, because number one, this is the previous impulse move that gave us this low, and for the market to give us another impulse move, it must clear this low to show us that this place is high, this is lower high, this another, and this high, lower low, lower high. Is this lower? Yes. Do not give us another lower low here. So that's how the market. That is the characteristics of downtrend. It must have lower high, lower low, lower high, lower low. So now, the next thing is that Control Z. So the next thing is that if we look what happened here, we see that this market. What happened here is that this it looks like. I'm just let me just use this pattern. It looks like double and like M. You know what? No M pattern now. Something like this. M just. What do you say? Okay, something like this. It does look like M, something like this. So let me just delete it. So the next thing is that these are our daily time frame, and we know that we need to trade on daily time frame. What we used to do is just to like check where the direction of the market is going. And if we look this daily time frame, after the market trigger all this level I'm talking about, so don't forget we don't used to trade on discount price. We only trade on premium price because that is the best way for you to get sniper entry. Because as a first trader, we want to be buying lower prices and be selling higher prices. So now if you check here, the reason why the market, I will still use that level. This pattern here, this thing is pattern. That's why the markets drop down from here. So now let me continue. You see that this daily time frame, this impulse move, this small bullish candle. You see that this thing is called reversal candle, and this another bearish engulfing, something like that. This BB candle is signaling that the market is gaining momentum to the downside. And for now, until this market break this level, example now, let me just use this example. Assuming this market want to continue to buy from let me see, assuming this market is uptrend, like this market give us low here, this is not high, this is not low here, this is not high. So now what will happen is that if we use our Fibonacci, I'm just giving an example. If we use our Fibonacci to here, so we are expecting the market to just come to this level. So we have to have two scenarios. We expect the market to come to this level, clear around there, continue to buy to the upside. So, but the second scenario here is that if this whole move here is correction, you understand? If this whole move here is correction, it means that this thing is impulse move, and this one is correction, and this one is under. So let me just delete all this so you will see everything very well. So what I'm trying to say that if this whole move here is correction, so this one will be the impulse, and this one will be the correction, and the next thing will give us another impulse. And just know that if this one is the impulse, this next impulse will break this low here. Just know that. So now let's use our Fibonacci to mark this, because this movement there. Let me delete this. Let's use our Fibonacci. So the reason why I use Fibonacci is just to separate the discount price and the premium price. That is the main reason why I'm using it. So let me just adjust the Fibonacci. Come here. So if we check what we see that, let me delete this for previous one. So if we check what we see that in this impulse move to the downside, this market have not cleared this high. So what does it mean? It means that this market until this price clear this high here, then this thing will still be on this will be buying, like it you can still call it uptrend. But what happened? It's just trying to say that this thing is impulse move to the downside. Why this one is not correction? And look what happened. It came to play around with this 0.71 and 0.79. Then the next thing, see the market started to drop. So I'm just using all this thing to explain. So the next thing is our 4 hours. That we'll see what happened to that area. So let me ask this question. Do anybody know about that block here? Hello, can you guys hear me?
Yeah.
So okay. The reason I'm asking this question, can we call this another block? Can we call this last bullish candle other block? Okay, why? Why? I want to just ask why. Yeah? Okay, you know that we can, you know that in other block there's mobility. Let me explain something. In other block, we can call this one other block. let me mark this one. We can call this one order block. Why? Because of one reason. That was responsible for this breakout, you know.
Yeah.
So in order block there must be breakout. So now if we check this movement here, is there any breakout this one is this particular green candle is responsible for? There's no anything like breakout here. So the only breakout is, if you notice, there's no any breakout because all this previous low, I don't even know how to put it. This is the previous low you got safe. So this one now is this one that is responsible for this breakout here. So what I'm trying to say is that this one is not order block, but you can call it this. Is this not? If the market now they have two types of zone, demand zone, supply zone. No, it's this something. But there's one word they call it. But me, my own, I don't to even like go about the word. More just that this market, when the market gave us this candle, if we check well, the market have not come and mitigate that area since when you said the market has just been dropping, but I've not mitigated it. So me, I marked that area that last week, and I was expecting the market to come back there, and look what happened during the news. The market just come and mitigate it, and look what happened next. It started to drop from that level. So let me just explain. That day that the market mitigate this area, I sold from this level here. I sold, but the only thing is that I closed at this. Let me say at this area, but it's not that I all do because nobody believed that the market would drop down like this. No. So what I'm trying to say that I mark this place because the market have not mitigated normal. So the reason why I mark it because the thing rhyme together with that with my this thing Fibonacci. You can say that I'm always looking for sell at a premium price. So when I mark use my trend Fibonacci. So this thing is around, like it's above. Let me say it's above the discount price. So it means that this level is very, like, even if I enter this sell from here, like from this level, even if the trade hit my stop loss, I'm still right with my prediction. Like I'm still right. I don't break my trading rules. You understand? So that's the reason why I know that the market will likely to turn there. But just that this thing happened during that evening time by 7-8 that evening time. So many people have stayed away from trading that period. So that's the reason why many people don't catch that sell. So let me just delete all this thing. So the reason why I'm explaining this is that because this level, all those small level like order block, you can just use it as confluence. But the main thing here is that what I used to use as what I used to use for entry is mostly that Fibonacci. So now next I used to go to the 1 hour time frame. The 1 hour time frame. Before the 1 hour time frame, let me go back again. Before the 1 hour time frame, the reason I want to go back is that I want to just explain something. So if you check, you see that this market, this thing is called liquidity. Why? Because the market just cleared this. It's called liquidity because, come here, I want to write this thing. It's called liquidity because of one thing. The market sweep this previous high, all this high. Then what happened? Then it started to drop. That's why it's called liquidity. So anytime you see this type of setup, it can go in that direction. This in the second direction for a long time. So what I'm expecting now is that this market sweep this liquidity. Then the next thing, the market won't go and sweep the opposite liquidity. If you check, you start all these previous, all this low, that they also call liquidity too, you know, because many people will set their their sell limit around these levels here. They'll set sell limits in this level. So all these things they're called liquidity too. So what I'm expecting now is that this market, as far as it has sweep this sell liquidity, the next is come and sweep this buy liquidity. So that's what you see how the market drop down. So now the next thing, if you check, you see at this level here now. So this level here now, this level here, if this market break this particular level, just know that the market will continue to drop. But normally in the daily time frame, we're expecting sell. So for us to know where we are going to look for sell, if we check, you see that this OOB is what is responsible for this breakout here. you know, what is responsible for this first breakout. Then the next thing, this is the extreme one. So now this is the two thing that is confusing. Like, where I go to look for entry, is it this first one or the second one? So now the next thing, we will now look for the Fibonacci, then mark it down to this level. So what is this Fibonacci telling us? According to this Fibonacci, we cannot look for, you cannot use Fibonacci here now. The reason why is that this market have not given us because number one, you don't know maybe this you have not know maybe this way the market will turn to, like where we start to, maybe this way it will start to retrace. Because what I'm saying here, the market can still just drop down small, and the reason why is just to rhyme this Fibonacci, this other block mistake. So what I'm saying here is that I'm just expecting this two level, so be expecting sell from these two level. If this one did not hold, this one would, just like this market would just likely to come and clear this liquidity and sweep this place away. Then the next thing, either respect this one or respect this one, then drop. So I'm just explaining, I just use this opportunity to explain what will happen next week, like next week from tomorrow to Friday. So this is what will likely to happen, because the market have swept this sell liquidity here, then the next is to sweep this buy liquidity here, the next thing, then after sweeping, because many people will sell buy limit here, and me, I even know many people will sell buy limit here. But what happens if this market sweep this liquidity at this place, just know that it will buy directly. And so the reason why I'm explaining this is that, so that, because I cannot just jump from here to the entry, because it's this place that will know what I will do in that my 30-minute time frame for entry. So let me explain this thing well. If this market come down break here small, just to clear people's stop loss, what you should be doing now is that the next thing, you have to go to the smaller time frame, which is the, let me see, month entry time frame is the 30 minutes. I'm just example. So now if the market break just to clear that people's stop loss away, that is the first thing to do, clear people's stop loss. The next thing, the market will have to come back up again, and if the market come back up, you have to wait for change of character. That is the first thing. If there's no change of character, I would prefer you not to enter, because the market can still be selling though. you don't know how market is to behave. You think that the market want to just retrace, market will just continue to be selling, dropping on the zone. Like if you look what happened last week, you see that there's no even sign to even look for re-entry or something like that. But I'm just explaining. If the market break out and why people stop loss, wait for change of character. This is how change of character is to happen. Let me just delete this one. Change of character is to happen like this. Even if, for example, if this is the previous high, the market has to break this previous high and drop down again. So the market have something like that. So the market have started to change and give us new structure to the upside. So from this level, that's when you're not looking for your buy entry. So something like this, you look for buy. So before I continue, do anybody have any question here? So because I want to explain how I to enter, I want to just explain my strategy, just simple. So these are my strategies. I only use Fibonacci, something like this. This is my strategy, just Fibonacci, because normally if the market is an uptrend, what will happen is that it will continue to buy until the market change character to the downside, then it will not start to sell. So this strategy is just to follow the trend. First thing, you first want to identify the trend, and that's your entry time frame. If you have found out that the trend is uptrend, the next thing, look for the previous low and the previous high. Look for the previous low and the previous high. Then mark it from something like that. Let me just delete this one again. Assuming there is something like this. See that this thing is the characteristics of uptrend, because that's low, high, lower, something like that. So the next thing, what I would also do is that I would just mark the previous low with this thing, put it on the previous high. So you see, then this will not be my entry. You see. So let me just go back to that Fibonacci. So I will show you the setting. This is the setting here. I'm just using only this for, but now I'm using I've already eliminated this 0.1. I'm just using only this 0.79. There's a reason why. Do you know why? It's because of one reason. No, it's not because of that. No, this is the lowest point. There's a reason why, because of something. Let me show you why. Because of one reason. The first reason now is that how many percent do you need to pass phase 1? 8%. Okay, now, so if I draw this thing well, you see that the risk to reward is, I mean, almost 4%. You know. So what does it mean? It means that I just need only 3 trades to pass phase 1. You know. So the reason I'm explaining this thing is that you will know that if you can cool down and because I've already like backtest all this thing. I've seen that I backtest this 0.79 and I backtest the 0.71. The two of them is okay, but at the end this one will give you more profit than the second one. That's what I can say, because this one is the risk to reward is almost 1 to 4. It means that you just need only 3 trades, and it will allow you not to just jump on, like not to just be entering, like just to enter trade anyhow. It will just allow you to just wait for your setups. That is the one reason. Number 2, you see that this thing, it will allow you to enter just like it won't to give you edge. Example, sniper entry, something like that, because mostly market wants just to, assuming people, let me see, if the market give a break of structure, people will just want to just enter early, you know. But this one just able to mark that place, that let me say that extreme place that the market will likely to come back and then continue to buy. But just know that this the market, this is not every time it will trigger this the entry. It's not every time, but it's okay, because even if you trade 3 times in a week, I'm not saying 3 times in a week, you make 1 loss, or you make 2 loss, you win 1, or you make 1 loss, or you win 2. That week you still end up with profits, you know. But normally the way we are trading now, let me say before, sometimes you may not end up with profit in a whole week. So you see that it's not about how many trades you take, it's about the quality of the trade you are taking. So it's better I should just wait for 1 good trade that will give me almost 1 to 4, and just to jump. So that is the reason why I'm just using only this 0.79. So just know that it's not every time the market will trigger your entry. But anytime the market trigger your entry, just know that trade and the market hits your TP, that is, you already make almost 4% already. And for you to even make 4%, some people still even get it in a whole month or 2 months. You see. So I'm just trying to explain. So let me just use example now. Last week, yes, last week, Monday or Tuesday, I analyze something like this. Okay, let me just explain. Okay, this thing happened on Monday when this market dropped down. This is Monday trade, but I need to trade on Monday. So if you look what happened, I want to explain something to you. I marked this thing like this, and look what happened. The market did not come back to this level. So I just adjust it again. I want to just explain something, what impatience can do. And I said, okay, now if this is the new high, or this one, but look what happened. The market did not come back to this level, this particular level. Even if I trade 5 times, I lose 2 times, I win 3 times, or I even lose 3 times, lose 2 and win 2 times, I'll still end up with profits. So what I've noticed is that trading is not about how many trades you take, it's about the quality of your trade. Because if you notice, some people can be trading every day, and at the end of the week they will still end up with loss. And some people will just take 2 or 3 trades or 4 trades, and they will end up with massive profit. So that is the difference between these two. And this is my strategy. The reason why this strategy is very good for me is because of 2 things. Do you know the 2 things? Number 1, because of the stop loss, and number 2, because of the take profit. Number 1, the stop loss is that there's sometimes that you may, okay, assuming you are just using other block. Let me use this one now. Okay, let me use this one. Okay, let me use this. I'm coming on to just explain one thing. Assuming, let me delete this one here. So assuming you will enter this trade like this, there's sometimes that you will not even know where you put stop loss, you know. There's sometimes that you will not even know where you put stop loss. But the thing is that in this strategy, because I tell you that the reason why this strategy is different, because the thing is fall in line with the trend, and I explained that in trend, if the market break this previous low, it will not continue to buy, except if the market come and liquidate, or the thing just come and manipulate. And if the market manipulates, it's fine, because you cannot just win on the old trade. If you win on the old trade, they will think that they will think you are cheating. Now you have to lose so that they will not know that you are cheating. So that they will not suspect you. You understand? So what I'm trying to say is that even if, because it needs to happen every time, you understand? So just that the time that it will hit your stop loss by just manipulating it, you will accept that loss, you understand? But what I'm trying to say is that if the market is an uptrend, just know that it will never violate this low. It will just drop down small, then break this new high, give us new high, then it will not even value this low again. It will just come down small, then give us new high. So if you know that you are buying the market, if the market we wish to buy uptrend, sell downtrend, so why are we selling that amount? Why are we selling on this uptrend? What we should be looking for is only buy. So for us to look for buy, this will just help us to just plot out the entry, something like this. So it means that if the market cross this area, I'm no longer interested in this buy again, you understand? Because there's sometimes that you enter buy, assuming you don't know about this thing now, you can just enter buy now, enter buy this any area here, and the market cross this area like this, something like this. But because of you are seeing that this thing is still buy, you will not want to close, you will still be holding, the market will still be dropping until it wipe your account, you know. So for us to eliminate all those things, this will just help us to mark our stop loss once. And another thing again is, I don't know, that is the truth. And another thing again is our take profit. So is that take profit that used to keep people very you know, that take profit, you may be a massive profit like this, but the next thing, example, and what has to make me to laugh fast is people that used to say, where is your TP? They will tell you to the moon. You know, that they are targeting moon. so let me just explain this now. So example, this market give us these movements, but I'm just using an example like this. So let me just I'm coming. Assuming this market trigger this our entry and give us another new high. Okay. I want to just make this into be trigger this entry too. So I'm just using example. You know that the market is perfect like that or no? Just follow your plan. No need to be afraid of the loss. As far as you follow your plan, even if you lose 3 times in a row, one TP will clear your loss. So just remember, don't forget, only one TP will clear your loss. So that's why you just need to be confident in your setup. So now the reason why of this setup and this strategy is because of the stop loss, and I've explained the reason why of the stop loss. The next thing is because of the take profit. You know that some people, they can cite good entry, you know, and one of them is among us here. Let me not talk. So they can cite good entry, you know, instead of them to target the previous high, or they should adjust their stop loss and be holding the trade, something like that. Like if they want to scale, they want to be like holding the trade, they'll be scaling their stop loss to something like that. But what happened? They will not be targeting moon. Like they will come look for where moon did not exist. So they will come look for moon, and they even know that the market will not reach there, but they'll still be targeting that moon. So something like that. You see that the market have already given you massive profit already. But what happened? The market reverse, change character, and you'll be watching it. And you still be saying no. This moon is still so the market, what happened? The market will come back, and the worst part that they will still like to pay me pass. And whenever the market give you profit and you not close, you will not want to. The next thing you just do is that you just want to remove your stop loss. and so that what we do will be, you just want to hold the trade till the thing clear you. So that's the reason why this strategy will just help you to break down everything. So the next thing now is that this strategy will just plot out your stop loss and TP. You see, the TPs are this high and the stop loss are this low, and the same thing for everything. If you check well, the same thing for everything. So assuming you know set your TP here, this market just liquidate this buyers, and look what happened. The thing start to sell. You have seen the difference. So that's the reason why this thing is different from normal. But you can just like back test and see how far it. But for me, if you follow this thing, follow your plan, don't risk more than 1%. At the end of 1 week, you end up in profit. That's what I can tell you. I can guarantee you that, but I'm not guaranteeing you because this thing is Forex. But just don't allow psychology to overtake you. Just follow your plan and don't risk more than 1%. Don't risk more than 1%, because if you are risking too much, you are inviting psychology. That is it. You want to just let you, because anytime you are not on the right side and your mind is not balanced or something like that, you will not even like trade according to your strategy again. You will be trading according to which thing?
We can start this Fibonacci as complex.
That's what I'm trying to say. Like, what I'm just trying to explain is that after you're done with all those bigger time frame and everything, and you want to, like, okay, now example, now we see that this market, we plot out two levels that the market will sell from here and will sell from here. You understand? So if the market have mitigated this area, then you see that the market is trying to sell or something like that. So I'm just using an example. So if we check, well, you see that this market did not even give us anything like entry that last week, Thursday and Friday. But if you draw this low to this something like that, there's no anything like entry here. So that's what I'm trying to say. So all this things just like we're only trading the trend. Don't forget, we're only trading the trend. So don't guys trade against trend though. Don't guys trade against trend, because normally if you trade against trend, it will never hit your TP. That is it. It will never hit your TP, because have you seen you buy? Have you seen you? So what I'm trying to say is that normally some will stop loss. It's normal thing. Some will stop loss, but at the end you'll be in profit, and it will allow you to journal your trade very well, because if you are journaling your trade, you will know where you should focus on more. You understand? So because of you have known that, okay, now this is my risk, and the interesting part is that you already know that, okay, this is my risk, because there's some if you don't know your risk, like example, you don't know the stop loss you're going to use, you can just enter any, sometimes you can just put this type of stop loss, like something like this. Sometimes your stop loss can be like this, sometimes your stop loss can be like this, sometimes your stop loss can be like this. So because of you now, the bigger this thing. Example, now some people enter trade here now, some people enter their sell here. Example, their stop loss want to be here to just cover this place. So I'm trying to say, so but this one just help you to know, okay, it does help you to show you this way your stop loss will be, and most importantly,